the problem isn't the pandemic. The problem is our economic system. And as most of you guys know, on September 17th, 2019, there was a crash in the repo market of the shadow banking system. And then voila, COVID appears in December of 2019. So I was always a little suspicious of it. I'm not saying it's not real.
I think the world should now be able to figure out what should have been obvious back then, but wasn't for whatever reason.
When we say, gold is up, what we're talking about the dollar price of is the dollar gold exchange rate, and that's the dollar price of gold. So there's just alternative forms of money where people get to express a liquidity preference or a credit preference, if you will, if you're concerned about if you're losing confidence in the dollar.
The Fed has moved into a policy from which it can never extricate itself. When we went to zero, when we did QE, people initially thought it was temporary and that the Fed could normalize rates and shrink its balance sheet. The Fed's printing press, it's starting to sink in, and they're getting rid of their dollars and they're buying gold.
Jim, you as well, you've called for new highs for gold. Tell us about how the current price level fits with your macroeconomic thesis.
Well, it's a big increase in particularly a pretty short period of time. Peter's right, it's been a long haul from 2011. But the thing I would point out is that there are bull markets and bear markets, and in basically any tradable instrument or commodity, or I consider gold to be a form of money. The bear market started in 2011, but it really fell off a cliff in 2013. And if you look at the high in 2011, $1,900, approximately, and where was the bottom of the bear market? It was $1,050 on December 16, 2015. Nobody knew it was the bottom at the time.
Peter, do you agree? Can we be seeing a 50% retracement before prices rally more?
The big retracement of that original bull market, where gold went from under 300 to just over 1,900, I think we've now formed a very solid base, really between about 1,200 and 1,500, which is where gold was trading for most of those years since it peaked. And now I think we've broken out of that range. I think we've taken out the highs. I think it's another leg of the bull market. I don't think there's going to be any significant pullbacks from here. I mean, there'll be pullbacks, but I don't think they're going to be very significant. I think if you're waiting for a big drop to buy gold, you're going to wait a long time. And when you finally get it, I think it's going to drop from a much higher price than it is if you just bought it right now.
So I've spoken to an economist recently who told me that if you look at the last time that the Fed expanded its balance sheet on a significant level during the last recession, what we saw was gold rising in tandem along with the expansion of the Fed balance sheet.
Well, remember too, the only reason that gold stopped rising at 1,900 was because the world was convinced that the Fed could unwind the policy, that it could normalize rates, that it could shrink its balance sheet. But I think now it's not just the dollar severing its ties to gold, it's going to be the world severing its ties to the dollar. The world is going to go off the dollar standard and back on the gold standard. And I think that this is going to be a more precipitous drop in the dollar's value than it was in the 70s. And so we can see something equally as impressive in the price of gold.
If everything was perfect, you don't need gold, silver, and Bitcoin. So I've been collecting silver since I was in 1964, when I found out that silver tinge upon my little dimes and nickels and then dimes and quarters. And I started buying gold in 1972. My first coin was in 1972 was in Hong Kong. I bought a Kruger in. And the reason is I understood what happened when Nixon took the dollar off the gold standard. And so, as you know, most of the pessimist gold guys like me just know you just can't keep printing money. And so this COVID thing is a little suspicious. Last night on Tucker Carlson, a female virologist came on and she had to escape from Wuhan. She says it's manufactured. My doctor says the same thing. So there's things about it that don't make sense. I'm not a doctor of virologist, but the people I know said there's something fishy about it. The gap between rich and poor, as you know, is growing. And then when at PPP and all of the social programs giving people money, people are now would rather stay at home and get paid. I mean, who wouldn't? But and anyway, and people hate Trump a lot. I mean, I've never been political, but Trump is my friend. We wrote 2 books together, and we're both concerned about financial education. So the gap, the real problem is the gap that this coronavirus exposed is massive, massive. You know, I wrote another book, it came out in January 2020, was Who Stole My Pension?
Yeah.
And many people know that Wall Street, the shadow banking system, the Treasury, and the Fed have been sucking cash out of pensions. So the old guys like me, we're in trouble. The boomers are in trouble. So a lot of the pensions are empty. So will there be social unrest? The old guys might be too old to protest, but the kids might if the parents move in with them. That's why Trump and I got together. We're not politicians, but we're both capitalists, and we want to teach people who want to be capitalists about money. And my poor dad, who was a good guy, you know, school administrator, PhD from Stanford, Northwestern, and University of Chicago, they're hardcore socialists. And so I fought in Vietnam twice. And I came back, I got spat on, eggs thrown at me, and all this stuff. And I know a lot of those hippies became school teachers. So that's what they're teaching their kids. So I'm tenuous around education and school teachers because they have a tremendous influence on young people. You know, I'm an investor. I have a lot of companies. And the people that work for me also think I don't do anything. But I provided the capital, we provide the structure, we take the risk, we do all that. But there's this guy, Richard Wolff, he's a Harvard, MIT, and Stanford guy. He's the most popular Marxist we have on YouTube today. And he's the guy that's saying that capitalists add nothing to a business and it should all go to labor. So if there's $1 million profit, then the labor should take the money, not the shareholders and not the capitalists. So that's Marxism versus capitalism.